Hello and welcome to this episode of Macro Sutra. I'm TCA Sharad Raghavan, Deputy Editor, and today we're going to be talking about a recent World Bank report that came that provided a lot of details about all countries' external debt. But in particular, we're going to be talking about the low and middle income countries, of which India is also a part. And what are the concerns about external debt? Is it worse than internal debt? And are the levels rising? Are the interest payments becoming a concern? All of this is what we're going to discuss. And for that, we have with you Radhika Pandey, Associate Professor at NIPFB. Thank you so much, Radhika, for joining us.
Thank you, Sharad.
So now, Radhika, the first question that I would like you to tell us about is when it comes to external debt versus internal debt, is it worse for a country to have high levels of external debt or high levels of internal debt?
So it depends on number of factors. Most important thing is that if external debt is taken in a foreign currency, then it is a problem, because then if the foreign currency appreciates, it leads to depreciation of the local currency, and it increases the burden of default. It increases the principal amount and interest payments. So a large proportion of foreign currency debt has concerns for systemic risk. It has concerns for financial stability and so on. That is number one. The other is that whether external debt is taken in short term or long term. That is another important strategic consideration, because if it is more of short term debt, then of course the interest payments would be lower because it's being taken for a short duration. But then again, there are redemption pressures. It has to be rolled over if the country is not able to pay back its debt. So short term debt and high levels of foreign currency debt, particularly if, suppose, for example, currently if more and more of dollar debt is being undertaken, and given that dollar is rising, then if the local currency depreciates, our payment burden will increase.
Right.
Because locally we will have to put in more amount of local currency to pay the same amount of dollar debt what the country had borrowed earlier. So this increases the risk of default, and then all sorts of restructuring mechanisms need to be undertaken. There is a risk of liquidity, there is a risk of solvency. So all these problems arise in case of external debt and not in case of internal debt.
Because it's all in your local currency.
It's in your local currency. Though, in fact, now in external debt also there is an option of borrowing in rupees, in local currency, which India is borrowing through FPI investment in government debt securities. Right. But for particularly those countries which are not borrowing in their local currency but are borrowing in foreign currency, they are subject to higher levels of default risk and higher interest payments and risk of default due to local currency depreciation.
Okay, so now that we know why high levels of external debt can be a concern, right, what have been the levels of external debt for the low and middle income countries in an aggregate? How has that moved?
So, the World Bank, as you rightly said, comes up with this report, which is called the International Debt Report. And it was released in the first week of December. It provides a overview of external debt conditions for the low middle income economies. And this is a World Bank classification of economies based on their gross national income per capita. So those economies which have GNI per capita between $1,100 to $4,515, those economies are categorized as low middle income economies. Currently, there are around 119 such low middle income economies whose debt position is discussed in this report, which is the International Debt Report. Now, what happened during COVID was that there was a lot of debt suspension that happened because economies were not able to pay debt, so debt suspension was allowed. So during 2020, there was a moderation in the overall outstanding external debt stock.
In absolute levels.
In absolute levels. But since then, it has been rising, and for 2023 end, external debt of all LMICs, the low middle income economies taken together, has risen to $8.8 trillion, which is 2.6% higher than the last year. So that is one point. But the more concerning aspect is that the debt servicing servicing burden has increased, and that is mostly due to interest payment, because economies are accumulating debt post-COVID to finance their health expenditures, to support growth, to repay previous debt. So they have been accumulating external debt. That has resulted in higher debt servicing burden, but more importantly, because of tight monetary policies in the last 2 years,
Interest rates are high.
2022 and 2023, interest rates are higher. That is the second factor. And the third factor is that dollar has been strengthening, so local currencies are depreciating. So the burden in terms of repayment has increased.
Every dollar you have to pay back is more expensive.
More
now.
expensive. So these three factors in conjunction have led to increase in debt servicing payments for all LMICs taken together, and that is a major cause of concern. And if this condition continues, again there will be more instances of default, and then there would be more rounds of discussion have to be done on restructuring of debt and so on, like which
Right.
was one of the G20 agenda, which is debt restructuring. So that will more countries will have to take that route, because they will not be able to repay the higher debt levels.
Either that, or they'll have to cut back on a lot of productive spending within their countries just to repay loans.
Repay loan. That will lead to suppressed growth. So it will lead to a virtuous cycle of lower growth, lower private investment, and so on.
Or a vicious cycle.
Vicious cycle.
Yeah. In all of this, then, how does India fare in terms of our external debt levels and our interest payments?
Yeah, so India is also part of the low and middle income economies, and if you look at the composition of low middle income economies in terms of interest payments, what we see is that the Latin American and Caribbean economies, these economies have the highest volume of interest payments amongst all the LMICs. If we do a region-wise classification, the Latin American and Caribbean economies and East Asia Pacific economies have higher interest payments. But what is happening recently is that South Asian countries' interest burden has increased, has jumped to a significant extent, and that is driven by two economies, India and Bangladesh, and more importantly, India. So that is one thing which is raised as a concern in the report, that while overall interest payment in terms of the magnitude is still low, but it is increasing at a sharp pace for India and for South Asian economies in general. So region-wise, South Asian economies' interest burden is increasing at a sharp pace. And if we look at there are two important concepts that need to be mentioned here, that overall external debt is of two types, long-term and short-term debt. And on the basis of the debtor who is borrowing, there are two important categories. One is the public and publicly guaranteed debt, and one is the private debt, which is non-guaranteed. So in terms of the debtor, these are the two important components of long-term debt. So the public and publicly guaranteed debt accounts for almost 60% of the overall debt.
This is for us?
No, in general, I'm coming to India. And then the private non-guaranteed debt is around 40%. Now, coming to India, what has happened is, in terms of interest payments, for the public and publicly guaranteed debt, interest payment has risen by more than 92%. From 2022 to 2023. So while overall the interest volume is higher for private sector, because it's in India, sovereign external debt is not the major part of overall external debt. It is the commercial debt, it is an NRI deposits, it is a trade credit, which is a greater chunk of the overall external debt. But if we talk only in terms of sovereign external debt, or what is called public and publicly guaranteed debt, the interest payment has increased by more than 90%. So as I said, precisely 92.6%. So that is a cause of concern that has been highlighted in general. So overall interest payment has been rising, and for South Asian region it has been rising at a sharper pace, and that is driven mostly by India and Bangladesh.
So now, does the World Bank give us a breakup of India's debt in terms of how much is in the dollar and how much is in the rupee? Because the rupee has been depreciating a lot, so our external debt is getting more and more expensive.
So now this is a very important question, and this has to be seen, this has to be corroborated by looking at the official external debt status report, which is released by the government.
Right.
Okay, so the World Bank gives a overview of numbers of what is public debt, what is private debt, what is long-term debt, what is short-term debt. But when we delve deeper, we can, we can get interesting insights when we look at the external debt status report, which is again for the full financial year 23-24. The only difference is that the World Bank report is pertaining to the calendar year, whereas this is the India's report, official report pertains to the fiscal. So it ends in 31st March 2024. So now when we look at this, we see that interest payments are rising, and it's rising for the government. And in terms of the currency composition, while dollar is the most important currency in which the government is borrowing, but rupee is rising. Rupee has become the second most important currency, and that is understandable because of the after the fully accessible route, the FPI investments in Indian rupee debt, Indian bonds has increased. So dollar occupies the first position. Rupee has now become the second position in terms of our external debt.
And that's something that we would also prefer.
We'll also prefer, correct. And in terms of whether appreciation of dollar is causing this, who has lent, that is again something important. Which creditor has lent to India, to whom are we owing this interest payments?
And whether it's long term or short term.
Whether it's long term or short term. So for all these interesting insights we get from the external debt report, and there we see that India paid a massive amount in 2023 to its official creditors, to its bilateral creditors. That is one. And the second is, so that is one, and that should now recede in the coming years. But what is of concern is that the interest owed to companies, which is called the commercial debt or external commercial borrowing, there the implicit interest rate has risen by 2% in 1 year.
Okay.
So from 5.2, it has risen to 7.1% implicit interest rate on commercial borrowings, and that is where the role of dollar comes. The strengthening of dollar, foreign currency debt, leading to problems for companies, leading to greater repayment burden for companies. So that is playing out in the commercial borrowing.
So just to get this clear, not only has the interest rate on this kind of debt gone up, but the rupee is also depreciating against the dollar. So overall, that debt is becoming very expensive.
That is becoming expensive, and it is getting a cause for concern for commercial borrowing, which is a major chunk of our external debt. And therefore, there was this news reported yesterday that more and more companies are now entering into currency swaps. Okay, so they are converting their dollar debt into other currencies like euro and the Japanese yen, because now we are seeing a kind of divergence in global monetary policy. Yesterday, the US Fed announced a cut in its interest rate, but it signaled that going forward, the interest rate cuts may be shallower, or they are approaching towards an end of rate cuts, whereas ECB cut its interest rate further. So there is a tendency, there is this anticipation of easing of monetary policies in the EU region, whereas in the dollar it is rising. So taking advantage of these changing interest rate condition, companies are more and more resorting to currency swaps so that they can trim their borrowing costs.
Right. And so now, how does India compare to the other countries in the low and middle income grouping in terms of who we owe money to? I mean, is it other governments? Is it multilateral institutions like the IMF and the World Bank? Or is it, as you said, commercial borrowings?
So in terms of, if you look at the borrower composition of external debt, as I said, sovereign debt is not the most important component. It is the commercial debt and the non-resident Indian borrowing and the short-term trade credit. So that is more important. Sovereign debt is a smaller chunk of the overall debt. In terms of who we owe money to multilateral creditors like the IMF and the World Bank. We also owe money to our official creditors, and most notably, one of our most important official creditor is Japan.
Yes.
Yeah, so that's a diversified set of. This is what we get when we look at the World Bank report as well as India's official status report on external debt.
Okay, and so now we know that interest payments for India have also risen. Right. Was this the case for the other countries as well, the lower and middle income
Yes,
countries?
it has risen. As I said, overall, the debt servicing burden has increased to $1.1 trillion. So the outstanding debt stock is $8.8 trillion. Interest servicing burden, which includes principal plus interest, for all LMICs taken together at the end of 2023 was $1.1 trillion. Right. And the greater proportion is due to increase in interest payments. So this three factors, higher debt over the last couple of years, higher interest rate due to tight monetary policy, and dollar strengthening and local currency depreciation. These three factors are playing out for most of the LMICs. It's just that in terms of the growth rate, it's the South Asian economies' growth, particularly India and Bangladesh, has seen the most significant jump, particularly for public and publicly guaranteed debt for India. But in terms of the absolute magnitude, the highest amount of interest payments owed is by the Latin American countries.
Right, you had mentioned, yeah. So then, what is the outlook for India?
So the outlook is that what the status report says is that going forward the debt is projected to decline. That is one important factor. But as I said, now these are new global headwinds which have emerged, which were not there at the time when the report was published. So while debt is projected to decline because we have made payments to our official creditors, but now more than the sovereign debt, it is the non-sovereign debt which would be affected because of the rise in dollar. And dollar is set to rise in the coming, at least in the immediate to short term, because of the anticipated policies of the President-elect Donald Trump, and also the signal from the US Fed that they are not going to cut interest rate by a greater magnitude. So dollar is likely to remain strong, and that has implications for companies borrowing. So the external commercial borrowing. So they will have to, take stock of their debt portfolio and their debt management strategy in light of the new changing global landscape, particularly in terms of the strong dollar. So that is important, in which currency they borrow, whether they borrow short term or long term. All these are important strategic considerations which they will now have to revisit in light of the change conditions.
Okay, and now we have a couple of questions from the audience. Aditya asks, if a country takes debt and invests the same in the construction of a capital asset, do you think this is a favorable situation considering the fact that an asset is being created along with the liability of the debt? Can we see any pattern in these loans? Are they mostly being used for creation of capital assets or being used for revenue expenditure?
So we don't get this, end use classification of for what purpose is the debt being undertaken, because when we talk about countries' external debt, as I said, it includes both sovereign debt as well as non-sovereign debt.
Right.
It includes long-term debt as well as short-term debt. Now, when companies are borrowing, they are borrowing for asset creation, but they also borrow for meeting their operational expenses and other short-term obligations. So it is not very clear for what purpose they are borrowing. But in essence, if there is greater emphasis towards long-term borrowing, then it leads to asset creation. Particularly in external commercial borrowing, we do get a sense that, because external commercial borrowing regulations require companies to report for what purpose they are borrowing, whether they are borrowing for asset creation or whether they are borrowing for repayment of previous debt, for what purpose they are borrowing. So there we see that there is a greater emphasis on capital asset creation. But for sovereign debt, we can't have that kind of, we don't know whether it is for repayment of outstanding debt, switching of debt, what is the debt management strategy, all that thing, we don't have a one-on-one answer for that.
Okay. And Vivekanandan asks, can you explain what happens to the lenders in terms of their fiscal stability when borrowers, say like Lebanon, Sri Lanka, Pakistan, they default, such as they did recently?
So then the entire process of debt restructuring kicks in, because we've seen that, since after COVID, there have been lots of emphasis of countries moving to default position, either due to liquidity constraints or due to solvency constraints. So then all these, the lenders and the borrowers, they come together, because the lenders are also of different types. There are private creditors, there are official creditors, and there are multilateral creditors like the IMF, the World Bank. Then there are countries, and then the countries may have borrowed from in terms of issuing their bonds in international capital market.
Right.
Then the private lenders also come together. So all of these lenders and creditors come together to decide on the restructuring strategy. Now, this kind of a platform is being recently provided by the G20. For example, we have a common framework. Now we have something called the Global Sovereign Debt Roundtable, which was introduced during India's G20 presidency. Now in Brazil presidency, it is there. So all these cases of these countries are discussed there. What is the amount of haircut that each lender will take, or whether they will, what kind of restructuring will it be, whether they will elongate the repayment period, whether they will change the interest terms from fixed to floating or floating to fixed or vice versa. So what kind of restructuring strategy will be undertaken? This is all decided on this roundtable, because it's very important to bring the private creditors on board, because most of the debt in terms of the overall magnitude is owed to private creditors.
Yeah.
And unless they come on board, even the IMF and World Bank cannot introduce a bailout package. For example, recently for Pakistan, IMF did a bailout package, but then IMF also has its own stringent conditions, that you have to maintain fiscal discipline, you have to depreciate your currency, you cannot have a stable exchange rate. So, and all these conditions also tend to destabilize the country in the short term. So it's not very straightforward that you take loan from an IMF and it's done. You are able to tide over the crisis. It's not that simple. So it is a long drawn process. Countries like Ethiopia, Ghana, Bangladesh, Pakistan, they are in that process. Some of these countries have reached an advanced stage of negotiation, and they have been able to arrive at a consensus. For some of the other countries, it's still in the negotiation phase, and it takes a lot of phases. Phase one, some amount of concession is given, and then if you adhere to some condition, then further progress is made, and so on.
So, okay, so there you go. The India's external debt situation is not quite alarming. There's nothing to be alarmed about, but there are some concerning elements, not to do with sovereign debt, not the debt of the government of India, but the debt of companies in India where they borrow abroad. A lot of this borrowing is happening in the dollar, and what the data is showing is that not only is the interest rate on this kind of debt been rising, but because the dollar has been strengthening and the rupee has been depreciating, this debt has also automatically started becoming much more expensive. So then it's been putting a much bigger burden on India in terms of servicing this debt, in terms of the interest payments that we need to make. So all of this is something that we need to be watchful of. It's not alarming, but it's something to keep track of. It's something that we should try to control. But on that note, that's all from us. Thank you so much for watching.